Welcome to the first done real estate investor podcast. So we have myself, Koukun and Unosawa, and
I'm Ryan Dick.
and for those of you who've been following us for a little while, I know it's been a short while since we posted some investor content. It's definitely been a bit of a journey the last couple of years here with rising interest rates, and there's been quite a few changes. But one of the reasons Ryan and I decided to start this investor podcast is that we kind of felt like the tides were shifting a little bit. We've seen interest rates come down significantly. We've seen house prices come down despite interest rates coming down, which and right now there's a lot of activity, especially in the first-time homebuyer market. But sort of in the back of our minds, having worked with investors, being investors, we've thought like, hey, if there was a good time to buy when interest rates have come down and prices have come down, we're not telling you to rush out and buy right now, but it's time to really consider, right?
Yeah. I feel like it's we had basically rising sentiment with rising prices, and then we had stable low interest rates, and then basically we had rising prices, rising interest rates, and then sentiment obviously started to fall, right? We had a period of time where people were buying a lot when the numbers really didn't look good because there was a lot of high sentiment towards it. Right now we're in like the reverse scenario. Right, we're in a scenario where the numbers are actually starting to make sense again. But sentiment's so poor that nobody's buying. Right, and so I guess that part of the purpose of this is to just let people know who've maybe been sitting on the sidelines or thinking about jumping in that, hey, it may be interesting to just start watching again. Right, like you can't catch any fish if your line's not in the water.
100%.
Right, so.
And that is the interesting thing in any kind of investment, at least from what I've seen. The best deals are available when the sentiment is kind of at its lowest, right? So again, not to say that now is the perfect time rush in to buy, but if you're an investor that has capital available, wants to invest in real estate over the next 10 years, now is a time to start considering, okay, let's look at some properties, let's consider some deals. Do the numbers make sense? Is the opportunity compelling enough? With the caveat that prices may decline this year and next as well. So you need to make sure you get a good enough deal that you're willing to ride it out.
Yeah. I think like we have a pretty good idea that prices aren't falling off a cliff. Right? I've kind of used the analogy of like we're kind of in this bottom here, right? We've got a little bit to go. We could be here, and we could be going this way. We could be here, and we could be going this way, right? But we're kind of in the trough. Are we at the bottom of the trough? Who knows?
It's impossible to know,
right? But at the end of the day, again, we've kind of our philosophy from a long time has always been buying good long-term investments, right? It's not about making a quick buck and just trying to time it so you get the thing right in a year. But if your numbers make sense now, then they're probably going to look really good as things start to change over the next several years, right? So
because there was a time in the late 80s when I wasn't born, but that I've studied, which is like in 1989, prices peaked, right? They went through a similar time to us in 2021, right? Massive double-digit price increases year after year after year. And then prices declined, right? They declined significantly over the next 5 years. But peak to trough, it was roughly like a 33% drop in prices. But I remember even up to 2005, what I heard from people buying there is that sentiment stayed low. But some of the best times to buy were between 1995 and 2005. While the sentiment was low, like prices started increasing without sentiment changing. It was still a buyer's market. Like I remember our home inspector, Chris Jalal, he was telling me he bought a home in 2005 that was a new build, and he went to see it, and the developer was calling him and following up with him again and again to try to get him to buy this property, right? So vastly different from what we've experienced, especially during the peak times, right? Where there were lines outside the sales offices, right? So anyways, who knows how those things translate, but we've already seen pretty much like a 33% drop from the peak times.
Depending on what section of the market you're looking at, absolutely.
So again, so it opens up that window. Like this same conversation a year from now was much tougher, or a year ago, because interest rates were in the 6% range. So even if prices were low, from a cash flow standpoint, it was very hard to enter the market and have your costs covered, right? So now that dynamic is changing. So, and we'll go into a deal to kind of run some of the numbers for you guys as well.
Yeah. No, I think it's one of those things that's really, there's a saying always, like, be fearful when others are greedy and be greedy when others are fearful. And it's so, like, we've kind of got to see it firsthand in the investment community, right? When everybody was greedy, people were trying to buy and they were forcing numbers to make sense, right? Now numbers actually make sense, and people are almost playing mental tricks in their mind to make them not make sense, right?
Because it is, and it's not that, like, it's a very natural way to behave. Because when prices are rising, even if the cash flow numbers are tight, there's always that piece of like, but if the home's going to be worth 20, 40 grand more the next year, I'm okay with the cash flow being very tight, right? Versus in today's market, even when the cash flow is good, there's this fear of, what if the value goes down by 20 grand? So even if I make $1,000 a month in cash flow, like, I'm still losing equity, right? And that may actually be the case in the short term. Right? But if you have this mindset of, okay, I'm going to buy good properties at good prices where the numbers make sense, and I'm not going to be in and out, I'm going to sort of ride this property for the next 5-10 years, I would say there's a much higher chance of having a good investment outcome, right, in this part of the cycle.
I would say if your timeline is a decade, I think whether you buy, you don't need to time the bottom. Right? Like if your timeline's a decade and it goes down for the next 2 years, it really doesn't matter, right? Obviously we don't have a crystal ball, but the odds that it's going to go down for the next 10 years are a lot slimmer, right? So and again, if your property's covering itself every month and you're putting a little bit in the bank and you have the opportunity for it to appreciate based on still the market fundamentals, then in my opinion you're in a pretty good spot, right?
So shall we dive into our hot deal for today?
Let's do it.
First off, we're going to go through just some of the basic numbers here, and this is our typical sort of profit calculator that whenever we are preparing a hot deal or we're sort of working with the client, this is kind of the numbers we run through. Now, one of the things for the viewers to note, these numbers aren't anything spectacular, but it's going to be the baseline for the property. And we're going to go into why this property made it to our hot deal and made it to our selection criteria after. But Ryan, why don't you go through some of the quick numbers here for
sure. Viewers. And just even another caveat on that, like this type of deal that we're doing, like when we purchased deals like this in the past, we weren't even necessarily looking for numbers that looked this good, because the upside is not necessarily just the future, like the property itself, it's the potential future of the property, right? So we'll go into, basically, this is a legal duplex in the city of Welland. It sits on a very large lot, 100 by 85. So there's potential for future lot development there, which we'll get into after. But the beautiful thing about the property is you're buying a property that has big upside potential, depending on what you decide to do with it, and the numbers still work from the beginning. So property's listed currently for $399,000 or $400,000. In today's market, we're not exactly pricing that it's going to go over asking. We're going to price in that it's probably going to be able to go a little bit under asking. So we're estimating a purchase price of $380,000. Currently, there's one tenant in the property who's paying way under market rent. They're paying $860 plus hydro and gas. The units are mirror images of each other. We are again being conservative with our rent on the main floor, which is $1,450 plus hydro and gas. These are both 2-bedroom, 1-bathroom units. We'll go into the pictures later so you can see that it's turnkey from going it that way. You just scroll down so I can see the. So basically, when you're on here, you've got a tenant that's basically paying half of what the market rent should be, or a little bit more than half. You put someone in that market rent up top, we're still making $205 a month after you pay for basically all your bills, and then even have a property manager in there as well. And so obviously $205 a month isn't exactly something to go right home about. But when you're buying a property where the upside potential is not the property itself, but other aspects of it, the fact that it can carry itself from day one is great. And then obviously as that older tenant turns over or we start to bring them up to market rent, that 205 jumps up, $600. And
that's healthy.
Now we're at
$800.
805. That's something to get, $800 of cash flow on a $400,000 property that's something to get excited about.
That's pretty sick. Yeah, this is our insurance, right? If a property can cover itself, it gives you staying power, right? So then you have the ability to hold on to the property. You're not bleeding cash every month. So yeah, this is exactly what we're looking for. Now let's now dive into why we're actually excited about this property. All right, so you can see here from the beginning, the main benefit of this property that is even on the listing is that it has a large piece of land beside the property facing the main road, right? You were saying here that the lot size was
100 by 85, so 100-foot frontage.
Okay, wow.
85 depth.
100 by 85. And the property is not taking up even half of that 100 feet. So even if we include parking there, it's probably like a 50 by 85 foot lot, right?
Yes, definitely.
Yeah. And the interesting thing, like when I did my land severance in Welland, what I found out is that Welland's pretty generous about allowing you to sever lots that are fairly slim.
Mm-hmm.
So in this particular case, you could even look for potentially a semi-detached pair of lots, like a 25 foot lot. Now it's fairly shallow, so again, this is where you would want to bring in a sort of a, what do you call them again? Planner. A planner who can help you navigate sort of what's the best use case for this land. Is it a duplex? Is it a small sort of multifamily? Speaking of multifamily, what did we find on the City of Welland website here?
Yeah, so one of the, if this lot was in, say, an R2 zoning, it would still be very good because there's still the potential to sever or to build something down the road that you want to do. This zoning is INISH or INSH, which in the City of Welland is the most friendly zoning that you could possibly have. You can pretty much do like anything you want. I recently sold a couple lots that were 100 by 150.
Okay.
They had multifamily properties on them, and the ultimate buyer is going to be building 2 multifamily dwellings on each property.
And these are larger buildings, not sort of duplexes.
No,
right?
they're going 8 units and 8 units on 100 by 150.
Yeah.
Right, so we're looking at 100 by 85 there.
Yeah.
That's the same zoning, same area. There's definitely opportunity to develop this into bigger, and they could have actually developed that bigger as well. That's just the sweet spot for their numbers.
Yeah.
So in terms of future development potential, whether you're looking to go big, or you're just looking to sever off a lot, sell it, and then again make your cash and cash return look better, there's a lot of potential options when you get into this zoning and you have a lot that looks like this.
Yeah. And like you've sold those 2 properties, and even previously we had a client who was trying to sell a property in this area where they got an offer from someone simply because of the zoning at what we consider to be above market value. Right, the buyer was just like when I did my research on this zoning once before, besides multifamily use, this zoning is actually a zoning that you can actually build healthcare related properties, so like retirement homes, and so
assisted living facilities,
exactly,
lots of different things like that. The zoning allows for residential, some commercial, and then various aspects of residential as well. So.
Now to give the viewers some caveat, this is not the prime area of Welland.
No, this is near King Street in Welland.
Yes.
This is very much downtown.
Yeah.
The areas surrounding King Street in Welland generally have this zoning because the city is basically very a big proponent of kind of increasing the investment in the area.
Yes.
So they're providing some grants. They're making it easy for you to invest in the area. They want to see redevelopment happening here, and it is happening here, right? There's a large commercial development not far from here that just went in that I think it's got like Mary Brown's Taco Time. It's got a bunch of different restaurants that went in there, and that's went up very quickly. And every time I drive by there, it seems to be booming, right? So it's nice to see when you've got quote unquote the big money kind of coming in and investing in that area. There are a condo development that's not far from there as well, and there was a large retirement home that also went in from there as well. So although the area is it's not like it's not a sexy area, it's not Northwest Welland or anything like that, but it is an area that has seen development,
Yeah.
and it's an area that the city wants to develop. So if you are looking to do something with this land, you're going to have a city that's in favor of it,
Yeah.
which is very different than trying to do something like this where you've got a city that's, although it may be within the guidelines, if the city's not in favor of it, it can be very, very difficult.
Yeah. But just, I think that's good context to have if you're a beginner investor and buying your first rental property. Maybe this isn't quite the type of property to get into.
Probably not.
Yeah.
I would say that there are other ones out there that we talked about prior that would be much more simpler, kind of turnkey. Your numbers are going to look better right away, and it's really simple. This one's a little bit more fun to talk about because there's a lot more options. But yeah, if you're coming at us and saying, "Hey, I'm a first-time investor. I've got $100,000 or whatever it is, and I want to buy something," isn't necessarily what I would recommend to you unless you've got some background in the other side of it.
Yeah, the cool part about this property is if you were to sever this land, like what do you think this duplex is worth without the land attached to it? Because it's still a duplex, right? Like it's still two bedroom units. Do you have a rough idea of how much the property would depreciate without the land attached to it?
It's tough because there's a lot of factors to it, right?
Yeah.
If the low paying tenant wasn't there,
Okay.
I don't think it would depreciate much at all.
Yeah.
I really don't think it would much.
Because it would be making
2,800-2,900
in rent, right?
Yeah. Right. So if it was, based on our current purchase price, if we increase that to where we had that $800 a month of cash flow, I think it would be scooped up pretty quickly. Right. Now, obviously, it does have that tenant in there.
Yeah.
We don't know how long the tenant's going to be in there. There's varying factors to there. So that's something to consider.
Yeah.
Right. If we're going to do that, I think there does need to be a bit of a price reduction, but $400,000 for a duplex.
It's still not bad.
It's pretty. You don't see a lot of things trading in the threes that are livable and making money from day one.
Yeah.
Right. So how much? Tough to say.
But if we do a ballpark of, say, like if the home is still worth somewhere in that, I want to say like 375 range, or even like
350 in the basement. There. The bottom of the basement.
Yeah.
I can't.
Now the goal isn't to buy and sell it, right? That's not what we're saying at all. It's more just to have a mental idea of, what is the home worth by itself. This land by itself, like clearly other developers are buying slightly larger properties than this and tearing down the property simply for the land use.
At prices that were higher than this current price.
So if we have a 50 by 85 foot lot, what do we think it's worth? Like if you can especially sever it into two 25 foot lots, that really, there's more use cases for it. You can pretty much build.
Well, you could build 4 units on that very simply. You could have you could actually build 6. You could build a semi-detached.
And each of them having 3 units in there, right? So
So I mean, obviously it depends on what it is. There's not a lot of land sales going on in Welland right now. The ones that are going on are generally bigger pieces of property that are being built for larger developments, not just single lots.
Yeah.
Right. So if we look at the most recent sales, we're going to be looking somewhere in that 150 range.
Okay.
I think that would be an aggressive price to state for this.
Okay.
Right. If you went in here and you said, okay, I'm going to get 120,000, I think that's really, really safe.
Yeah. I would say so. Especially if you can get 2 units, that would be a steal for someone to get it for 120 grand, right? So, okay. But yeah, so say between that 120 to 150 range. Now it's going to cost you something to sever this land.
Do you have a little more context into that? I know you've done it before.
Yeah. So the 2 that I did, I think at the end of the day, I paid something like 20-25 grand. So you have to get a survey done. You have to hire a planner, go through the city process. You have to, anyways, there's you end up paying a whole bunch of fees, right?
It's all fees,
to make it happen. I didn't go as far as getting the lots serviced. A property like this is actually ideal. You probably have services on the main road, and you typically leave it to the buyer to service it. So this is assuming you're buying this property with the intention to sever the land and sell it to a developer, to someone who's going to take it to its next stage. If you don't need the cash right away, it's not the worst idea to even keep the land, because obviously today's market isn't the most aggressive market. So if you can buy in a slow time and wait until more development's happening, more people are actively buying land to build, you're probably going to get a better sale price for it.
100%.
But yeah, it's cool to see a property where pretty much from day one, you're unlocking, call it 80 grand worth of equity after all your costs, and you're putting 80 grand into buying a property like this. So these were not available a few years back.
No, yeah, like again, if you were to look at something even in today's value where you bought this thing for $380, you got the vacant unit rented, you went through the severance process, call it a year to be safe. In a year's time, you theoretically could sell that land if you put it at a basement price of say 120,000.
Yeah.
Say it cost you 25, 30 grand to put into it. You've now literally got the property, the cash flowing property for free, right? This is the old burr.
Yes.
It used to be a thing without construction.
Yeah.
Right. This is a land burr essentially, right? Which anytime you can get an asset for nothing.
Yeah.
Obviously, there's time and energy involved into it,
Of
and
course.
you do need to fork out some capital initially.
But if you're someone like, again, this is not for the beginner investor, but I also look at when I was getting started in real estate, I was, even after the first couple of properties, I was still an enterprising investor. I was willing to do the work. I was willing to find the opportunities that, took more work, but I was willing to figure it out. This is one of those where you can, you get paid for the work you do, right?
Absolutely. And and again, depending on where you are, if you're not looking to necessarily recoup that initial investment, and you say are maybe a little bit more enterprising, or you've got a little bit more background, the upside gets even bigger.
Yeah. If you can build a multifamily property now you have a newer multifamily property, no rent controls, and just longer term, that may be something to consider. I would probably wait to build until I see more happening in the area.
I would completely agree with you. I think it's one of those ones that if you can buy this now, you let the property keep chugging along, not having to do anything with it, and you leave yourself an opportunity to basically get a free piece of land down the road. That's a pretty good thing, right?
Honestly, I love that idea. Like, if you can buy it, sever it, maybe wait a year or two, and say that tenant turns over and that the property is now worth a little bit more, just wait a couple of years. If you can sell the property and recoup your cost, and you just keep the land, because the land doesn't care that it's not in the best neighborhood. There's no tenants. It's just a piece of land, right? You start accumulating land parcels like this. Like, there are some investors that I've come across, even in Welland, who've just bought parcels of land for a long time, and then they started building on it, right? So it's that is a curious investment strategy, I will say.
It's certainly it's an interesting property from that perspective. The fact that you can get it from day one and not have any out of pocket monthly expenses, and have the upside potential of either severing, selling, or building down the road. Is something that's not.
There's a few options, and then as an investor, you get to decide, okay, what is my risk tolerance and what is my interest or willingness in terms of what is the work I want to take on, right? The severance process is just paperwork, right? Paperwork, you're dealing with, surveyors, you're just waiting on the city, you're waiting on them to sort of do their part. If you're a GTA investor, it's very easy to do on the computer, right? Actually building, now you're on site, you're taking on a bit more work, but this deal is it's quite compelling, actually.
And now what's interesting, why don't you go and see how many days on market this has been?
Does it show up?
It should show at the bottom there, I believe.
Okay, 43 days on market.
Right. So this is a property that cash flows from day one, has what I would call huge upside potential for the purchase price, and it's been sitting in the market for a month and a half, which is again, like, if you go back a few years, this would be gone like this. But the nice thing about that is when it's been sitting in the market for a month and a half, we should not have to pay asking price, or we can kind of work with the seller again, depending on what your future potential plans are with this. There are certain things, again, we could get done and negotiate with the seller prior to actually finishing it. That also can be more and more advantageous for you.
Yeah, this upper unit looks fairly decent. Like, this kitchen's a bit old, but everything else, like bathroom, I wouldn't change a thing. Flooring looks decent. It looks like it's been painted. So yeah, and this is the vacant unit. And you were saying that the other unit is a mirror image of it, right? Being a two-story.
Yeah. One's got outside, one's got the balcony, but yeah.
Yeah, this is very interesting. Honestly, it's not a bad looking building, all things considered. 2 gas meters, 2 hydrometers.
The other nice side of it is, as I'm sure you've realized, that the more your tenant can pay for utilities, the better.
Yeah.
Right? So when you've got their heating and their hydro, obviously all of their water is discretionary to an extent, but you know, like how they can set the temperature whatever they want, you don't care, they're paying for it. Right? They can leave the lights on at all hours of the day. They can do their laundry at peak times. Doesn't matter, they're paying for it, right? So you reduce a lot of your variability by having a property that is like this, where it's really set up where you're paying your water, your taxes, and letting them kind of take care of their own usage.
No, I love it. Yeah, it's unique to see actually 2 gas meters on a 2-story. The units you mentioned, they're one on each level?
Yep, it's they're just right on top of each other.
Interesting. I wonder how they work that out, because they would likely have had the furnaces in the basement, and then they would have separate ducts, one going to the second floor, one going to the main floor. Interesting.
I've seen this a lot in other areas actually, where the conversions say happened longer ago. You know, this may have been a purpose-built duplex back when it was built. Very likely it could have been converted a long time ago when somebody did it. And it's just super beneficial to your current investor, because again, it makes your numbers look so much better. Instead of paying, you know, when it's negative 12 outside and you got a couple to $300 a month gas bill, you don't have to worry about that.
I'll mention this. I know, again, this area isn't prime currently, but I am curious about this longer term, because if you look at most cities, especially as they get developed, the land close to any waterway, like, generally generates a premium. Right?
And that, I don't know if you know exactly what that is, but that's the flat water center that you can see. We can see it in the screen, right? That's the building shadow or reflection that you see in the water there is a Welland flat water center. For those who are local to Welland, you'll notice that in the summertime, that place is absolutely bumping. You've got people with kayaks, you've got people swimming. In behind that flat water center, you've also got tennis courts, basketball courts, that Empire's put in for the Empire Sports Park. So there's a lot of development going on there from a community enrichment perspective. If you go maybe 500 to 750 meters down north of this, you're also going to see there's a beach area that they have. There's more kayak rentals and different things that you can do. So the community, and again, that big money is investing in and around this area.
Yeah, especially north. Like now, it's a different neighborhood, but in the north end of Welland, along the canal, there's like a massive development going in, right?
Yes, I think the land was purchased for something like 30-something million. So yes, it's a massive development happening in there.
Yeah, so I don't know. Again, this is not things that change in 1 or 2 years, but if you have a long enough time horizon, right, that is where, like, I feel some of these things actually will change. Where, I don't know, I find it curious, because waterfront property or properties near the water in most areas are at a premium. Welland is one of the few towns where there's like, rundown homes along sort of the Welland River. And whenever I drive by them, because I drive by them on my way to work every day, I'm like, there's got to be a time in the future that these properties are getting torn down and like rebuilt. Because like,
well, if you see it, like even if you go further down to where the Welland River is by Colbeck, those are some of the nicest homes in Welland, right? On Colbeck, backing onto the Welland River. Now those are newer subdivisions or newer homes, right? Considerably newer than the area that we're looking at. You'll also see, as you continue to go down there, land that was there has now been developed, and you have like really new, really nice homes backing onto the water, right? So this was kind of the old area of Welland, right? This canal at one point in time was used for industrial purposes. So the people living in this area were working in that industry. They were generally walking to work. These were kind of where the factory workers were kind of residing back when Welland was a thing. This canal now is no longer an industrial use, right? It's now a recreational use. So along it, where there was free land, people are building that up, and those properties are very high valued, right? What's eventually going to happen to here? Well, the city's zoning it so that if people come in and invest, it's very much encouraging. Now, is it going to happen in the next 2 or 3 years? Probably not, but is it going to happen in our lifetime? I'd be willing to bet on it. I'd be willing to bet a good bit on it. So
perfect. Yeah, so we've covered a decent bit here on this first on this first podcast. I guess just to round things off, I I'm curious to hear your perspective, because you've definitely worked with a lot of investors sort of in the buying and selling process. You also have the perspective of working with sort of the, the traditional home buyers and sellers in the Niagara area as well. I'm curious to see what are you seeing right now that maybe for an investor not in the Niagara region, it'd be curious for them to just to gain some perspective and to have a sense of what's happening in this area.
For sure. Yeah, I would say so. In the Niagara region, and let's call it the sub 800,000. And again, like if you're in the Niagara region, we start to get to that 850 range. We are getting into much nicer homes. If you're coming from Toronto, this is your 2,000 plus square foot, 2-story type thing in a very nice established neighborhood, right? So if we're getting into kind of your first, second, average type home for, say, like the lay person kind of thing, I've got a couple different categories, right? So we've got like your newer builds, we've got your kind of more established, call it 70s neighborhoods, and then we've got more of this kind of more downtown, older, getting to century, not quite type property, say pre-1955 or something like that. It's very interesting how it's moving. The new builds have been hit the hardest, like it's not even close. The new builds are very, very difficult to sell right now.
Interesting.
A lot of new builds were purchased by out-of-town investors pre-construction. They were purchased when interest rates were low, when sentiment was high, and when numbers didn't quite work, but there was a huge bet that appreciation was going to take it up and nobody cared. During that period of time, interest rates went up, appreciation went like this, and now these same investors are having a really hard time making the cash flow. Right? I was talking to somebody the other day, they've got a townhouse, their mortgage payment's $4,000 a month, and they're trying to get $2,500, and I had to have a conversation with them that they are not going to get $2,500. There's not a chance. They might get $23,000, $2,350 if they're lucky. Right? So they're going to be sitting there, what's that, $1,700 a month? That they're going to be covering in expenses.
Plus property taxes, plus insurance.
Fortunately, single family are going to do that. But so these properties are coming up. And now what's also interesting is a lot of the people, these properties price points may range from, in these newer builds, let's call it $5 to $550 to maybe up to like $6 to $650 on some of the more detached type stuff that's coming around, particularly in Welland right now, just to stick with where we're at. So people, buyers, end user buyers looking in the $550 to $650 range are not interested in these at all. They would much rather take their $550 to $650 and go buy a home in an established neighborhood, maybe a 70s built, maybe on the low end it needs some renos, but it's super clean, you could move right in, it doesn't look new, and maybe on the high end of that spectrum you're looking to a fully renovated home, but you've got a lot that's twice the size, you're in a more established neighborhood, you're also probably dealing with homeowners who are going to be surrounding you as opposed to renters. So the neighborhood looks a lot different in terms of how well cared for it is. Right? So people are moving into these more established neighborhoods. If I've got a listing and I've got one of those listings, I'm not really worried about it selling if I'm pricing it well. I can have a new build and I don't care how well I price it. Sometimes it's just really, really, really difficult in order for it to move. When we get into, I would guess, kind of let's call it these older homes, more downtown areas, it's in between the two. Prices are certainly on the lowest end. But if people can get into those neighborhoods, they're trying to stress themselves. Right? Now, again, from an investment perspective, the numbers certainly look a lot better over there. But it's interesting to see how things are shaking out. The more established neighborhoods are doing way better. It's like a completely different market right now. So it's very interesting.
And it's interesting, right? Like even our investment philosophy from a few years ago, we didn't really do a whole lot with the new construction, just because even back then the price points were really high. And what we found is that the more established neighborhoods where you could buy a 70s bungalow, put in a basement apartment, we liked the numbers better on those. And it's interesting to see how those neighborhoods on some level fared a little bit better than the new construction sort of subdivisions. They didn't fare a little,
they fared like 10% better.
Yeah.
So now in those same neighborhoods, selling this is actually a very good point for somebody who may be interested. In those same neighborhoods, for instance, there's a listing right now on Preston. It's a legal duplex. Very nice area of Welland. This exact area that we're talking about that sells well. It has 1 unit occupied, 1 unit vacant. It was renovated within the last 5 years. The numbers work on it. It's listed at $550. Has not sold. It's been listed for, I believe, a couple months now.
Yeah.
That same home that has an in-law suite but isn't a legal duplex and is vacant is selling for about $50,000 to $60,000.
Wow.
You're getting, like, that one hasn't sold yet, so I don't actually know, but compared to their list price, we're getting upper 5s to low 6s for that same property. If it's an in-law suite and not a duplex.
That
so
is,
if you're an investor right now, you can go in and buy a legal duplex, which used to be more money than a single family home. And you can buy it for less than a single family home.
Yeah.
So obviously we don't know what's going to happen, but theoretically speaking, a legal duplex should be worth more than a single family home, even though it's not currently in this market. But that's a great opportunity if you're an investor to kind of come in and be able to do something like that. You're buying what should be in superior product for a cheaper price.
I will say it is one of the painful realities for the clients of ours that have duplexed their property and are asking us, is now a good time to sell? Like, obviously, like, it's tough.
I'm turning away listings like it's my day job because
unless you have to sell.
There's a totally different, but then I'm still going to tell you that, like, listen, here's the price that you're going to have to sell it for. And usually when I had that honest conversation with people, they're like, oh, I didn't realize it was that bad. I don't want to sell, right? Which is the right move for most of those people. Obviously, if depending on your situation, you may have to sell, but then you need to know that, I don't care that your neighbor sold for 600. You are not getting that. So.
But so it's a tough time to be a seller of those legal duplexes. And again, the whole point about when sentiment is lowest, that's when the opportunities exist. And there's no reason why a legal duplex should be cheaper than a single family home in the same street. Not after all the work that it has to go into legalizing it. And honestly, for its use, right? Like, because I still believe that there is this shift in terms of demand where there's going to be more multi-generational living, right? Like that is a wave that I don't think is slowing down by any means. So
and you see that, like, for instance, I've had a couple sales of legal duplexes recently, and one that I can think of specifically, we had a very difficult time selling because everybody who came into it wanted for multi-generational living, and it wasn't an easy flip back. It wasn't just remove a wall and the stairs are already there. It did require a little bit more work to it. Ultimately, we sold it to somebody who was going to turn it back into...
Interesting.
It was a multi-generational living. They wanted for mom and dad and the kids. The kids are adult kids. But that was who was buying it. And I'm seeing that a lot. But they almost want it like a true in-law setup because it is multi-generation.
They want to be able to access the upper kitchen.
Yeah, they still want to go upstairs without having to walk outside and see their, whatever, but they do want their separate living space. Right? So that use type is still there. It's very interesting right now.
Have you seen, and this is, I'm curious for myself because my home currently has an in-law suite. It's not a legal apartment. And I have half the thought if I were to upgrade to keep it as a rental, but not to rent out both the upper and lower, but to rent it out to a single family who is a multi-generational family. Have you seen any rental listings like that generate much of a premium over a single family home if it has a second kitchen, second bathroom?
Definitely a premium over a single family home, but definitely a loss compared to
two separate units.
To two separate units, yes.
But for the peace of mind in terms of a tenant who pays their own utilities and is a single sort of tenant, what do you think does it fall somewhere in the middle there, or like how much of a premium do you think that like an in-law suite on a single family home gets?
It's very, very tenant dependent. I do think that you will have a harder time finding a good tenant.
Interesting. Because it narrows down
your
the
tenant
pool.
pool is just so much smaller, right? Your tenant pool is smaller. Now, I've had like a legal duplex where people have called me that we've got it listed. Hey, can we get into the other unit? We've got a multi-generational family type thing going on. We'd love this. So I've never actually tried to lease it out that way, but just intuitively speaking.
Because most of the time as an investor, you want to separate it. You want to rent both units out, right? So
yes,
I can see that. I can see that.
But there's definitely some demand for it just based on anecdotally, based on me listening to that. But what that's ultimately going to look like and how much of a loss you're going to take. Now, there's obviously probably a management ease there too.
That's
right?
what I was
You don't have
thinking,
to deal
right?
with,
Yeah.
with 2 tenants kind of thing.
Yeah.
I'm interested. I'd be interested to try it if you're interested in trying that type of place.
Yeah, because I'd be curious what that. Yeah, that just a curious thought. Just a curious thought. Well, I think we've gone on for a decent bit here for our first episode. I think. Yeah, we're gonna make this a priority to do these monthly. Definitely want to keep our eyes peeled for opportunities. We're not saying that every one of these are ones you need to put an offer on, but I think it's worth starting to consider them, starting to look at the numbers, starting to if you've been following us for a while and you've never made it to Welland, maybe let's have a conversation about maybe go check out a few homes and like start to get into the mindset of being an investor, because what we've noticed is that the best deals are found when you're actively looking.
Yeah.
Right.
Well, especially right now, like as we said earlier in this podcast, I'm telling a lot of my sellers not to sell if you're an investor, unless you have to sell.
Yeah.
So let's flip that. If I'm a buyer, who am I looking at? People who have to sell.
Yeah.
Now that doesn't mean everybody's going to be reasonable, everybody's going to be there,
Yeah.
but it does mean that there are going to be opportunities within that.
Yeah.
For people to do it, right? Like we heard a story the other day at our office meeting that somebody offered $540 on a place, conditional on the home selling. This person needed that home gone. They ended up taking $400,000 for a cash offer.
Oh wow. Yeah.
That's $140,000. Now that's obviously a one-off scenario and it's very unique.
Yeah.
But that seller,
They
needed to
Yeah.
sell.
Yeah.
Somebody got a fantastic deal because somebody needed to sell.
Yeah.
So it's one of those things where if we're not getting in the mindset, I guess it's about shifting the narrative a little bit, right?
Yeah.
If we're not in the mindset thinking that there are potentially deals out there, then we're going to miss the deals that do come up.
Well, I think even in a slow market, the best deals get action quickly, right? I think that's the one misconception like that I'm seeing even on the mortgage side. It's like the clients who are getting the best deals are often in competition because the price is just priced low enough that it's like a few buyers are like, okay, that doesn't make sense. Like that is worth offering on, right? And you have to move quickly and you have to like be prepared, but you're not going to move quickly if this is the first home that you're seeing and like you're considering, right? That's where getting into the mindset of like, if your plan is to invest in real estate and you think now to say the next 2 to 3 years is a time when you want to deploy some cash, getting into the mindset of like, okay, let me analyze some deals, be aware of what's happening so that when, a no-brainer comes across my desk, I can move quickly because I've seen a few other deals and I'm like, I know that's a no-brainer. That shouldn't make sense based on what I'm seeing and I'm going to take it.
Yeah.
Right.
Yeah. No, I would completely agree. Yeah. Like I've been in with buyers, not so much investors, but just regular home buyers. I've been in competition a fair amount in the last, a fair amount in the last 2 months, but if you go in the last 6 months, even more.
Yeah.
And when we're in competition, usually 9 times out of 10, it's not going over asking.
Yeah.
Still getting conditions on the property.
Yeah.
But people just know that it's a thing, so it moves within a couple weeks.
Yeah.
Right? On the flip side of that, I've also got other buyers that are like, okay, who's been on the market forever? We're going to filter by that.
Yeah.
And then just make a phone call. You know what I mean? And then you can get for considerably under asking as well, right? So, but if you're not out there looking, then that's never gonna come across your desk.
Yeah. So. And one of the sad parts with all of this is that we know that when sentiment shifts, the demand will come back. Like as soon as you start seeing prices rise 5%, 10%, and again, we don't know when that's going to happen, but we know that when that happens, the demand will follow it. It's like they saw prices rise, so therefore they want to get in before the next leg of the journey.
Well, it happened in 2020 too, like where there was people that were looking in 2020 and they finally decided to pull the trigger in 2022 when they could have got that same property for $150,000 less. Yeah. Now we're at the other end of the cycle, right? Yeah. And it's like somebody's going to come to us in 3 years and they're going to say, I started looking in 2025 and I finally decided to pull the trigger. Yeah. And they pulled the trigger and they didn't lose money, but they could have bought that same property for $100,000 less or whatever it was, right? So
it'll be interesting to see how these next few years play out, because I'm not expecting crazy price increases, but I am curious to see like what deals happen, because even in that example you said, that person who bought a home for $400,000, like probably if it wasn't selling at $550,000, if they just marketed well the next day for like 450, 500, they're probably getting some decent action on it. Like that 400,000 price just seems absurd for that property, right? So like, yeah, like in a funny way, it's the opposite of forced appreciation. It's like a negotiated equity, right?
Yeah. I mean, there's like, unfortunately, there are people in bad scenarios.
Yeah.
And in a market like this, there's going to be more people in bad scenarios than there were in 2022. Because when your home price just went up 20%, not a lot of people are in bad scenarios. When your home price just dropped 20 or 30%, there's a lot more people in bad scenarios. And so, you know.
And we're finally seeing like actually bank sales as well. Bank sales.
We're seeing a lot of them.
Yeah.
We're seeing a lot of them. I did several last year where I had buyers, mostly first time home buyers in that case, which is a bit more of a risk because there's some things that they're foregoing, but get screaming deals on bank sales. Because again, like after it's been sitting there for so long, eventually they just got to take something. So
because we used to tell our clients, and back then bank sales were very rare, but we used to say like, even if you got a bank sale, you weren't going to get much of a deal because the bank has an obligation to the previous owner to get the market value. And in a more active market, like they're just going to hold out and they're going to get a decent price. In this market, sometimes like even for regular sellers, you're telling clients, hey, you need to price less than the last sale many times.
When the market is going like this, you can't price it here, you have to price it here.
So in that environment, like the bank is an unemotional institution that wants to recoup their money. So they're going to start with the comparables, but then after a certain number of days, they're going to consider lower offers.
Well, and it's also one of those things where they have a calculation where they've already accepted a loss on the property.
Exactly.
Right?
Exactly.
They're usually selling it now, where that obligation that you mentioned to the seller, because if I can't make my mortgage payments, but my property's worth $600 and I owe $500 on it, the bank still has to sell it for as close to $600 as they can, because I still get the difference after I've paid off my debts. Right? Now, the person owes $600 and the property's worth $500. So that obligation of that person just went out the window.
Yeah, it's gone.
And now they're just looking out for their own, and they would rather take $100,000 or $150,000 loss on their books than continue to carry this. And so it's, you know.
Yeah, and it's not like the banks are going under by any means, right? Like they have their loan loss provisions. Yes, it's going up. It's still well within a manageable range.
It's
right?
It's within the range. If you talk to people who are doing lending at banks, they're still lending. Yeah.
There's no crazy concern yet, but for those specific properties, they're like, we're going to take a loss. We're going to just move on with it. And sometimes those are the opportunities as well. And I think the one takeaway that I will leave everyone with is an opportunity cannot be fully defined before it comes across your desk. That is what makes it an opportunity. So like, there's always some quirk to it. There's always some like hair on the deal that like 99% of people are going to be like, I don't know if I want to deal with that, which then creates that opportunity. Sometimes it's speed, sometimes it's, maybe an older property, sometimes it's, just a strange situation, right? Like there's always some quirks to it, but then you have to decide, is this the opportunity for me? And if it is, then sometimes you can get a really good deal on it, right?
Yeah, no, I would completely agree with you there. It's, if everything was perfect and peachy and you just went in, you got exactly what you were looking for and you were going to make money on it, then every single person would do it.
Exactly.
Right?
Exactly.
Which obviously isn't the case now. You're able to get a lot less of that than you used to have, right? You're dealing with a lot less hair, a lot less crap than you used to have. But obviously it's still not, so
100%. Well, we hope you enjoyed this episode, and stay tuned. We're gonna keep these going.
Awesome.